Now, China and the EU face a potential trade war over Chinese EV exports to Europe. This as China has urged the EU to scrap EV tariff plans. EV sales in the UK and some other countries are actually falling because first-time EV buyers aren't buying a second one, leading to unachievable government market share demands. Maybe an early warning sign for South Africa as it tries to accelerate EV sales. David Furlonger, editor-at-large for Financial Mail, joins us now to look at the challenges for EVs beyond SA. Thank you so much for your time and for joining us in the studio. David, let's actually take a look at what is happening between China and the European Union. So, of course, the EU proposing to increase those tariffs for Chinese EV imports. Has the EU woken up a beast here?
Because it doesn't cost South Africa anything financially, it's quite an amusing little fight going on. Chinese EVs receive enormous government subsidies, so they do have an advantage going into the EU.
They can charge less prices, basically.
They're coming in at cheaper prices, yes. Yeah. So naturally the European governments are nervous about this, so they've got provisional additional taxes which they want to put on from as early as next week. These are up to 38% higher. It depends on how much cooperation each individual EV maker had with an EU investigation. So the highest is 38% or 38.1%. Yeah. The lowest is about 14%.
And 38 would be for those that just are not cooperating in the investigation.
Basically, that's it. Yes, yeah. So what we have is the EU, or when European car makers went into China, China insisted that they had to go into joint ventures in which the Chinese companies and Chinese governments had the majority stake. So the EU's initial technological advances, and when I say the EU, it's also the Americans and the Japanese as well. Yes. But this relates to the EU. So their technological advantages went to the Chinese. Now the Chinese are ahead of the EU in terms of EV technology. So not just in terms of pricing. I mean, there was recently a survey of German auto companies in China, and 60% say that the Chinese are either more advanced technologically now on EVs, or they will be within the next 3 or 4 years.
Wow.
So what the EVU now is doing, having been forced to give a lot of its technology and expertise to the Chinese, is now doing, if I may use the expression, a Chinese takeaway. It wants the Chinese companies to come into Europe in joint ventures in Europe with the European companies, and then to share its expertise.
Wow.
So they're trying to get their advantage back again.
So it seems like this is a broader fight for competitiveness, really. Yeah. And does it look like the EU imposing these extra tariffs is just a low-hanging fruit right now, but there really should be a broader conversation on how do you actually boost your own competitiveness in the EU?
It's not, I would never call anything to do with China low-hanging fruit.
Okay, yeah.
I mean, China has retaliated immediately by warning of higher tariffs on petrol and diesel cars from Europe. It's warned of high duties on pork in retaliation. But I think Europe, to a degree, has just said, no, hang on. You are an incredibly protectionist economy in China.
Yes.
Yet now you're trying to flood us with cheaper electric vehicles. So maybe it's time for us to fight back and actually have parity. Yeah. I think that's what they're looking for, is parity.
All right. I hear you on that. In this, does then, affect any of the EU car makers that have operations in China?
Directly, no, but there is the possibility. Let's take the German companies as an example.
Yes.
BMW, Mercedes, and of course VW, and look more broadly, Stellantis, all of those, they've got joint ventures in China. The suggestion now is that the Chinese should go into joint ventures with them in Europe and with other companies as well. Now, one of the biggest Chinese companies, in fact, BYD is the biggest electric car maker in the world. It's opening a factory in Hungary. So this is what Europe wants to see more of, actual direct Chinese investment, but also joint ventures.
All right. Well, let's cross over to the UK. What is happening there with Stellantis in the UK?
Well, Stellantis is getting a little bit fed up with the government and it can't make up its mind. If you look at the EU, 2035 is the date at which it wants to cut off all sales of new petrol and diesel cars. The UK was going to do 2035, then it decided 2 or 3 years ago to go for 2030.
Okay.
Then it went back to 2035. Now the likely Labour government after next week is saying, should we go back to 2030 again? Now, if you were to do that, then by 2030, Stellantis would have to be selling, I think I'm right in saying, 80% of the cars they sell in the UK would have to be electric.
By 2030?
By 2030.
That is 6 years.
Yep. And Stellantis is saying, that's not feasible.
Yeah.
When we look at what's happening in the rest of Europe, you need to fall in line with Europe. Because they say that if we're going to be doing 80% electric vehicles by 2030, we're going to have to do huge discounts. And we simply cannot afford to do that. So if you're going to insist, we're going to close down both our plants in the UK and move all our production to Europe.
So that's also basically tied to demand.
Yeah.
Right? So then what exactly is that saying about demand right now if Stellantis is nervous?
Demand in the UK and in Germany for electric vehicles, and we're talking battery electric vehicles, is down. Let's look at the UK, where it's down quite sharply from last year. One of the problems they've got is that people who bought an electric car first time round, they don't want a second one.
Is there any specific reason for that?
Various reasons. One is around charging infrastructure. There's not enough. There's also this what they call this range anxiety. You're terrified you're going to run out of electricity halfway through your journey. Resale values for used electric vehicles in the UK are lousy. So people are looking at all these issues. So they're not buying a second one.
Yeah.
And so you've also got a situation where one of the biggest fleet companies in the country, they've got 700,000 vehicles in their fleet, which they lease out. Well, it's actually a leasing company and they lease out to fleets. And they're facing a huge loss on their vehicles because what they expected to be the resale values are not being met. So it's all these little issues which we in South Africa can sit back smugly and say, well, no one here is buying electric vehicles, so, you know, we're well out of it at the moment.
Yeah, it's quite interesting because we're always complaining that South Africa is never a first mover in anything. It's always following. I mean, just at some point, we're going to have to do the EV push. What can we learn from these instances?
We learn from a number of countries that we've got to realize that the load on the electricity grid is far greater than we will ever imagine. You know, never mind Eskom, but other countries have found that it's greater than that. And we've also got to realize that we can't go wholesale the battery electric route. We, in this country, we are very much suited to hybrid vehicles, whether it's hybrid battery electric or pure hybrid, we've got to go very slowly. And we're still going to be selling petrol and diesel vehicles here for the next 30, 40 years. Electric will come in very slowly.
Well, thank you so much for putting that into perspective for us, David. Really appreciate it. That was Financial Mail's editor-at-large, David Furlonger.